circumstances.
So long as DOMA is on the books,
Yeah.
it won't apply to same-sex couples,
Okay.
right?
All right. Now, what if I don't transfer the property, but we get it during marriage, or the period we're registered domestic partners, and we contribute unequally to the purchase price? Now what?
Well, now we've got the problem with the CCA that says my 100,000 earned income is mine, my partner's 50,000 earned income is hers. I think it's community income. If we're buying the house with our combined community earnings and own it 50-50, then I think there's no gift. But the IRS would say, consistent with the CCA, that we are using part of my earnings to subsidize her 50% ownership. It might in part be a gift under their view. The problem is we really don't know, and we need to find out from the IRS what these rules are. I don't think people are filing gift tax returns for the creation of community property right now. The issue most often comes up when a couple splits up or divorces, and then they're ordered by the court, or at least supervised by the court, to split their combined community property, or one will have to pay some money to the other partner to get a release of the community property. And the question is whether or not that's an income tax event, or is that a gift?
Yeah, because in the past, we did have some, in fact, even in the guidance, as I recall under 1041, when you have these property divisions, basically what the court is saying, or excuse me, even the IRS I think has said it in rulings, that this is a gift. If it's unequal, it's a gift, and you got an unlimited marital deduction, so no tax.
Right, no tax. And for income tax purposes, whoever ends up with the property takes the historical cost basis. So it's just it has no tax consequences at all for a divorce doesn't for a, as you say, conventional married couple, an opposite sex married couple.
Yes, yes. Okay. Well, how about prenuptial agreements, excuse me, or I guess you could say premarital, but anyway.
Or pre-dups.
Pre-dups, whatever you want to call it.
If it's a domestic partnership.
So can those be used to reduce some of the uncertainty?
Sure. I mean, we can agree between ourselves, or two spouses or registered domestic partners can agree between themselves to opt out of community property. If you opt out of community property, you know what the rules will be. But of course, you don't get any of the benefits of community property. And one benefit I probably ought to mention, it's under state law. I mean, because remember, these relationships are recognized under state law. When one partner dies, let's say you bought the home years ago for $100,000 and now it's worth $2 million. California appreciating market is in effect again.
Right.
When the first partner dies, what's the tax basis in the surviving partner who takes the home? This is a capital gains issue. If I had to take carryover basis, there's 1.9 million gain in that property. Technically, at the federal level, you get a step up in basis as to 50% of the ownership. But because of a quirky little rule that's in the federal code and that's recognized under the California tax law, for state income tax purposes, if you own property as community property, the surviving partner or spouse gets a fresh start or 100% step up in basis, 2 million basis at the death of the first partner, which means if the survivor turns around and sells it tomorrow for 2 million, zero taxable gain.
Right. So you get the step up on the whole thing. Now,
for state purposes, not for federal purposes.
Now, for federal purposes, they're just saying, well, we don't recognize that. Is that the deal? Because
the statute mentions spouse. It's Section 1014 of the Internal Revenue Code. It uses the word spouse, and right now, because of DOMA, spouse does not mean same-sex spouse.
Okay, so we need to make that clear. So you can only get the half step up.
Right, at the federal level.
And maybe for just a moment, and we can't get any detail related to this because we're running out of time again. Though right now where we are is the estate tax has been repealed for a year, and this automatic basis adjustment doesn't necessarily happen.
Right. As of January 1, 2010, the estate tax was repealed. The gift tax has not been repealed. A lot of people don't realize that, but the estate tax has been repealed, and with it has the step up in basis provision. I'm not sure yet what that means about California state law, since it's dependent on Section 1014 of the Internal Revenue Code. But my own
Good
feeling
question.
is that everyone expects Congress to reenact the
Yeah.
estate tax, probably with a 3.5 million exemption, which is what it is at now, and make it retroactive to January 1. But I've been on listservs lately with estate planning attorneys who are pulling their hair because, and have clients who have died since January 1, and they need to know what the basis is in the property, and no one's quite sure. It's supposed to be carryover basis except for the first 1.3 million.
Right. So anyway, we have a huge problem here. We're going to talk about it in more depth probably in another show, unless Congress takes quick action this year. I don't think anybody expects Congress to take quick action anytime because they can't seem to get a whole lot done.
Right.
All right. So, and the 3.5 million exemption that you mentioned that really applied for 2009 doesn't apply for 2010. 2011.
It goes back down to a million.
Yeah.
If Congress does nothing.
Our tax law becomes a pumpkin.
Yep.
At the end of the Cinderella story of the Bush administration.
Right.
And so then we're going to see basically things going back to the way that they were before 2001. And so we're going to have a very low exemption and much higher tax rates.
Right.
Okay.
If that happens.
So I've got about 30 seconds that I can give you to throw something out. So
well, let's assume we are going to have an estate tax, and it's got an exemption and a marital deduction in it.
Okay.
Right now, same-sex couples can't take advantage of this planning device where you set aside an exemption amount and give the rest to your spouse and claim the marital deduction and have zero estate taxes on the first spouse to die. But I want to challenge people to think about the fact that in the near future, either DOMA will be repealed or it will be struck down by a court, and at that point, same-sex married couples will be recognized by the federal tax code. I think people who are drafting estate plans, planning for the marital deduction, need to take this into account as they draft their estate plans, even though the relationship's not recognized right now. It might be in the short.
So put contingency language into your estate plan.
Certainly.
Yeah, okay. All right, folks, we're all out of time. As you can see, this is a huge area, but I so much appreciate, Pat, you being with me today. Thanks for joining me and sharing with us some of your thoughts related to this stuff. Extremely complex area, but very timely topic. So, folks, hope you'll pay attention to this. See your tax advisor, and I hope you'll join us next time on Financial Insider Weekly.